In this video, we will be reviewing the Vortex Gold EA by Mr. Stanislav Tomilov. Stick around to the end to receive a free expert advisor from us at Prosperity Algo Solutions. So we can kick off here on the sales page to get an idea of how this bot works. And what's quite interesting is it's actually giving us quite a bit of detail regarding how the strategy functions. So in particular, it is mentioning that it is using an artificial intelligence element to it, and many expert advisors on MetaTrader also make similar claims. But what I found very interesting is it also tells us a bit more about the technical strategy and the actual entry and exit signals behind the bot, which typically gives you a bit more insight on how it works, as opposed to more the blanket neural network vocabulary. So specifically, it says that it uses indicators including the CCI, which is the commodity channel index, and the parabolic indicator to provide entry and exit signals. So this is quite refreshing actually for MT5 EAs, because quite often with some of the more popular neural net enabled EAs, they don't really tell you how they enter and exit, but this one actually is giving us quite a good amount of detail. We can see that it trades gold on the H1 time frame, as the name would very much suggest, and supposedly it's also prop firm compliant, which is quite interesting. And it claims that there's no risky strategies as well. Again, it says no martingale here too. Let me just do a quick search. There we go. No martingale, no dangerous methods of money management are used, and there's a stop loss and take profit for each position. And now we can also flip through some of these slides to see a bit more detail how it works. And clearly, as we can see, the indicators which are mentioned in the description are being used. And we're also seeing that there is some degree of grid-based mechanism which is going on, which is also quite interesting. So instead of entering with one position, it appears to enter with a grid effectively. So this is actually really, really cool. So quite a unique strategy for sure. So quite curious to see a bit more when we run a backtest. But before we run a backtest, let's pop over to the two signal tabs here, just to get a bit more of an insight on how it's been performing to date. And as we can see here, as expected, the performance has been excellent to date. We're seeing roughly or a little bit over 100% returns. One thing to note though is I believe they're currently running on higher risk settings. And something that we can see is that this has been running for a few months now, but just recently, the developer made some pretty significant deposits. So as we can see here, these trades were all about to close in a loss, and they all closed at a similar time. But before that happened, the author deposited an additional $2,000. So the original deposit here was $1,000, but then when it started to accumulate a pretty significant drawdown, an additional $2,000 was deposited. So there's both pros and cons to this. So the pros are this signal appears to be legitimate, and it actually is statistically significant, but you can tell that with running these high risk settings, there was almost a blow up, so the author did need to add more. But what we can see is that yes, this is a high risk system, but it did effectively double the initial balance, and the majority of that was done only in 1 month. So what you could argue is that if you're running a high-risk system, if it's capable of making several 100% returns, as soon as you double your account, you would just withdraw your initial capital, and then you would effectively let it keep multiplying. And provided your account doesn't blow before you double your money, or you're able to double your money more often than it blows, technically the risk reward of the strategy would still be in your favor and you should make money. Nick Sean has a similar approach to this, where as long as you double your account more often than you blow your account, you should be good to go. But from what I'm seeing here, so far it appears to be, at least in the settings which the developer is running, a relatively high risk system. And based on the grids which we were seeing earlier, I wouldn't be surprised if this was running a grid martingale type system. But let's jump now into the backtest. So I actually took the liberty of downloading this system already and running a quick backtest. And we can see here that it did actually hit the stop loss a couple of times. This may have been an indication of an equity stop loss. But to get a bit more detail, let's first go through the Inputs tab. We can see that currently the risk profile is high, which could be why it's running more of a martingale-based system. We're also seeing that there are a few filters in regards to slippage, and there is a little bit in regards to the time, but not a ton of variability on the input settings. If we go to the Backtest tab, we can see that within 1 year, it supposedly turned $10,000 into $124,000. Keep in mind this is running on the high risk settings, and this appears to be a very risky system. So likely a fair amount of leverage is being used. So that could be explaining some of these returns. And moreover, if we look at the profit trades, it does have a high win rate, but that would be expected with this type of grid-based system. So let's quickly run a visual mode backtest just to be able to see how the strategy actually works. Okay, let's wait for it to get up and running. Okay, so it's actually a very, very interesting system. So it's entering with an entire grid, and it's having multiple different orders. So the trigger is indeed being signaled by the parabolic and the CCI, but when it enters with a whole grid of orders. So this is a very unique concept, and it's effectively spreading out its orders. So instead of having a classic grid martingale, it's kind of opening its initial position and it's spreading out its orders, which is really quite a neat system. And from what I can see here is we're not seeing the traditional scaling and lot size. So let me let this thing keep running for a bit, but effectively from what I can see is it's not running the traditional grid martingale system, because if we go back to the visual backtester here, we're not seeing the volume scale exponentially. So yes, it's a grid, but it's more of an entry model using a grid, and it's not necessarily using a martingale money management technique. So this is quite interesting. So from what I can see, maybe to wrap up this video, is there's definitely a real trading strategy here. Seeing the magnitude of returns would either indicate maybe a bit of over-optimization or very significant risk settings being used. However, there's definitely a strategy here. So my general takeaway would be very cautious about using this because it does appear to be rather high risk. However, as there's a real strategy here, it might be quite useful for applications such as prop firms, where you could perhaps use a higher risk approach because your risk is actually capped. So let me guys know what your thoughts on this expert advisor are, but it's quite an interesting one. And I'm excited to kind of dive into the approach a bit more in detail for what I'm thinking of developing even more expert advisors based on this. And stick around for the following short clip to receive a free expert advisor from us. Thank you and take care. Before you click away, if you're looking to get a real expert advisor, here at Prosperity Algo Solutions, we're currently offering our Golden Time Bomb system based on automating the London breakout and opening range breakout 100% for free. Watch the pinned video to find out more and to get access.